All right, so today we're going to dive into the Luna aftermath, what this may hold for the future of Bitcoin, as well as many other crypto assets. And we're going to dive in, of course, I think, with a person you guys know, and that's Alex Mashinsky from Celsius. My name is Paul Barron. Welcome back into TechPath. Alex is joining us today, so great to have you back on the show, Alex.
Hi, Paul. Hope you're feeling better.
Yeah, I am much better. Back in studio now. Don't have to feel like I'm, a leper in my home studio, but I'm in good shape. Just correcting a little bit with the voice. So, Alex, let's get into a lot has happened in the last week, 10 days with obviously Luna. Everybody, I think enough has been said about Luna in general and why it failed, what the reasoning was. What I'm more interested in is the aftermath of Luna and what this might mean for the rest of the crypto market, as well as Bitcoin, obviously, as the leader. Are there any indicators right now that you're kind of looking at that kind of help you take a look at the market overall and see it one way or another, whether it's a bearish position or a bullish position?
Yeah, great question. And I think it's important that most people understand that not everybody who calls themselves a stablecoin is a stablecoin, right?
Right.
So stablecoin come in three different forms, and let's unpack that and look at it, right? So we have coins like USDC, TUSD, and USDP, which is Paxos
Right.
coin. And those are fully collateralized, one-to-one collateralized with US dollars that are sitting in a trust company or with a bank like Silvergate.
Yeah.
And you can just go and redeem them for $1, meaning it doesn't matter what it's trading in the market. A USDC can trade on some exchange at 70 cents, but if you take that USDC and go to Silvergate, you're going to get a full dollar.
Yeah.
Then we have a second family, which is DAI, USDT, and others, which are over collateralized, meaning they have
Mhm.
150 or 200% of collateral. And you create them by posting the collateral, and you can always redeem them for full value because there's excess collateral. And the minute there's no excess collateral, it's being liquidated.
Yeah.
And then there's a third group, which is under collateralized stable coins. And it's important that people understand that they might have a little bit of Bitcoin or something else, but the vast majority of the value there is created through this algorithm and doesn't really have anything. So as long as markets are calm and things are going well, those algorithmic coins that are not stable coins are going to maybe hold a peg. But the minute there is stress, and they're not going to hold a peg. And
Yeah.
people, I saw in the news a lot of people saying, "Oh, Tether Depeg, USDT was trading at 95 cents." That did not happen. It was trading on exchanges for 95 cents, but anyone who went to Tether and said, here's my USDT, give me $1 back," got a full dollar. So it was just willing sellers that agreed to take less than $1 on an exchange that suffered the reduction in value.
Yeah. Okay, so understanding stablecoins, because I think there are a lot of people looking at this condition right now, market condition, and also kind of leaning into potentially where maybe a central bank digital currency could start to really eye what's happening within the stablecoin sector. If you look at where regulatory framework is now, Celsius, of course, you guys deal with this on an ongoing basis just to stay legal within all the countries that you work in. And you also look at what's happening with the central banks and the potential of a digital currency, which we've seen many tests around the globe over the past year. Is this moving central banks closer to a digital currency like a stable coin, or do you think this gets them maybe a little bit more antsy to maybe reconsider how digital monetary systems might work?
Well, again, the dollar is already digital, right? And over 90% of transactions in the US dollar are electronic transactions.
Right.
So the question is, are we migrating from a digital dollar to a CBDC?
Hmm.
Or is the United States going to allow banks and other institutions to issue a blockchain-based digital dollar, which is not a
Right.
CBDC? And
Yeah.
and that question still looms, and no one has an answer for it. Obviously, the Fed and that IBS and others, BIS, sorry, the BIS
Yep.
are investigating all the different options and different things that can be done, but there's no clarity as to what they're going to choose. I'm sure that the U.S. regulators, considering Americans lost billions of dollars in Luna and UST, American regulators are going to dig into this and pass new laws that restrict who can call themselves a stablecoin.
Yeah.
So I think those are two separate things, and they're going to happen in parallel. Again, at Celsius, we list 14 different coins that are different variations of what we just mentioned, the three different buckets. And it's important that people have to understand that they're not all the same, and that they can't just assume that just because somebody calls themselves a stable coin, that it has the same strength or the same liquidity as USDT or USDC.
All right. So with that being the case, I was looking at a story here on crypto.com, unblocking users, reversing their glitch Luna trades. These are the kind of things that happen during a potential, we won't call it bank runs, but that's in essence what's happening here, or people trying to maximize on trades when something starts to hit the floor, hoping for a little bit of a bounce. But the fact is that you've got major exchanges that are doing these types of transaction reversals, which is not necessarily setting really well with the crypto community. A lot of people push back on it. Their CEO came out, talked a little about it. Not pointing fingers. The point I'm getting at is, where are the safe havens? Now, I'm a Celsius user. I consider Celsius a safe haven, but there's only a handful of those. And the other aspect is you can only put so much money in any of these, places, and a lot of people will diversify just for safety. What other areas are you seeing out there that are potential safe havens for placement, whether it's crypto or stablecoins?
Yeah, so let's look at this, right? The good news is that the crypto community goes through stress tests at least twice a year, right?
Yep.
So anyone who's on margin, anyone who's doing silly things, who's taking risks, unnecessary risk, is going to be taken out. And unlike the banking system, where we have a spreadsheet based stress test that the regulators run with banks,
Exactly.
and every 15 years we go through a real stress test, and we find out that none of our banks can withstand a 50% drawdown. Here we are in Bitcoin with over 65% drawdown, and companies like Celsius and others are standing strong. Obviously, anyone who was not ready for this has been taken out, and I think
Yep.
there's going to be a few more casualties.
Yeah.
But at Celsius, we are ready at all times. And if we have huge withdrawals and then all these people come back, we had hundreds of millions of dollars of withdrawals and then hundreds of millions of dollars coming back, right? So we were ready with the liquidity. We were providing everybody the option. We doubled, for example, the swap limits, so people can
Uh-huh.
swap inside the app on our web app, take a loan. Our staff works 24/7. We have over 800 people at Celsius, and they work the weekend, they work the nights to make sure that every Celsius customer. Again, we're still the only people in the industry with 1866 huddle now number, right? You could just call and talk to us 6 days a week. So if you don't want to interact with the app or whatever, so these are the real differentiators between a company that is here for the long term, a company that's focused on making sure you get to financial retirement, you get to, we all together make it through, and people who are just here to grab fees or liquidate you or do other things.
Yeah.
So these are difficult times. I lost money. I'm sure you lost money. In terms of market cap, we didn't sell, so it doesn't matter, right? It's going to come back, but you got to continue hodling. But you need to be there. You need to be able to provide this liquidity. And like you said, crypto.com, other companies had a lot of problems, and obviously customers got hurt.
So, okay, so understanding where I think some of these markets are, obviously, I've been impressed with Celsius response, even to the scenario when you had the situation with US-based customers on the yield rates. I think the bounce back for Celsius was pretty positive. And when you look at those kind of things that continue to happen around crypto, and you just mentioned the potential here around either one, maybe another major project like a Luna, there seems to always be some sort of indicator. And I think even with Luna, for the smart money, most people knew that there was a risk, an algorithmic stablecoin, the process, the BTC backing of it, and then Do Kwon even going out and putting a price tag on how much they were willing to essentially come back to the plate to support it. All those kind of things probably should have identified. I think in many cases we get inside these bubbles. Do you see any projects that I won't name names, but do you see areas of the industry, whether it's DeFi, metaverse, gaming, or traditional layer ones or layer twos that are at risk right now? Any particular category that you're watching closely?
Well, again, I think all the leverage has been taken out already. So we went from 67,000 to 25,000, right? So if you were, and I mentioned when Bitcoin was 47,000, everybody waited for a rebound, right? People went on, we had the highest level of leverage in crypto history. So, and I warned about it. I said, look, normally when we have on my weekly AMAs, right, on Friday on
Right.
YouTube. So I warned saying that, look, uh, uh, this kind of leverage means that the sharks on Wall Street are going to lean on us and make sure that they wipe all of this out, right? And unfortunately, that's exactly what happened. But right now, we are the extreme fear, I think all the leverage has been cleaned out. Everybody, all the coins from the weak hands already moved to the strong hands. So we know that, okay, this new level of support under extreme condition, despite Luna dumping $3.5 billion of Bitcoin in a matter of less than 24 hours.
Yep.
We still held at 25,500 on Bitcoin, and we held something like 1850 on Ethereum, right? So we know that these are extreme support levels, and we'll be trading in that range now of 33, 28 to 33 until we see if we're going up or we're going down. But
Yeah.
the markets were tested with extreme fear and extreme volume.
Yeah, because the volume last week or end of last week was really very active compared. We hadn't seen volume like that in quite some time. So I would agree with you. There is a lot of liquidity that has been taken out of the market. Do you feel confident right now that we are at the bottom, or what are your thoughts on that? Even with the impending scenario of a recession, even though I believe we are in the recession already, but you've got a second quarter of growth, potential GDP that's going to be corrected. The likelihood we could still see inflation grow again and get a false top. What are your thoughts on how that might flow into it as it affects the bottom?
Yeah, so all these things are interconnected. The crypto market watches the stock market. The stock market is watching the Fed, and the
Yeah,
Fed is watching inflation, like you just mentioned. So normally, the Fed watches the markets because inflation is at zero, close to zero. But
yeah,
now, the monster, the dragon, is out of the Pandora box, and every month that we print higher inflation, is the monster, the dragon gets another head, and we have to slay the dragon. We have to take heads out, and every time we print a monthly inflation number that is lower than the previous month, we will take one head off the dragon, right? So right now the dragon has about 3 heads, so we need at least three months worth of lower inflation, right? So we printed, I think, 8.3. We need to print 8 or 7.9, and then 7.5, and then 7, and then that's when the Fed is going to come down. And when the Fed comes down, the markets are going to come down. When the markets come down, the crypto markets will come down. Now, if
sure.
you look back at 2020, you look back at other cycles, you will see that Bitcoin actually bottoms first. It bottoms before the stock market. It bottoms before other commodities, and it's a leading indicator. So why? Because when it goes down, it also goes down more. Again, the Nasdaq was down 25% at the peak. And here we're seeing, like I said, over a 60% drawdown for Bitcoin.
Yeah, I think one thing that my circle that we talk a lot with both investors and mentors, advisors. One thing that they are leaning into right now is the fact that we have seen so much liquidity in the market. A lot of people are, mostly in the VC side, are really sitting there with a lot of dry powder, but they're not sure where to deploy it. And I kind of compare this to what's happening in the crypto markets, because there's a lot of good projects that probably should be trading higher. And I think we would all agree many of these projects are at bargain basement prices right now. Knowing which ones to pick are going to be the real magic of understanding how to invest in these periods of time right now that we're dealing with right now. So I think that's going to be a factor, especially as it pertains to how it correlates to whether it's S&P or the stock market in general. With all that being kind of the scenario here, how long do you think this runs? Do you think this is an over the summer, or do we see a 2023 correction? Where is your economist and experts there on the Celsius team kind of looking in terms of a forecast?
Yeah, I do think that we are facing a recession. I just don't know if it's going to be this year or next year, right? So
Yeah.
um, it took us 15 years to build these excesses, right? I mean, since 2008, basically there was more and more liquidity being pumped into the market, and people were taking greater and greater risks. And you're not going to unwind that just in a few months, right? So it took 15 years to create. It's probably going to take 2 or 3 years to unwind. And
Mm.
we've seen that basically in every cycle. I think the Fed tried to catch a falling knife in 2000 because of Corona.
Mhm.
So we've seen another pump to the top, another high. But this time we are going through the economic cycle because the Fed is focused on inflation. They're basically saying taming inflation, slaying the dragon is more important than helping the stock market. So the sick companies, the weak companies are going to be taken out, and the strong companies, the good business model, the profitable companies are going to stay with us. And we just have to watch carefully who is who, and then make sure that we use the companies that are the strongest.
Yeah, I'm in agreement with that. I was looking at this chart right here. This is the pretty much I think it's 25-year, or the max. And you can kind of see the real pain point that we had in inflation was back in 80, when it was the 15%, and still potentially going up here. If you look at the 1 year, you can kind of see the historical right here since last summer, which we had that little bit of top and a little bit of a dip, and then boom, that's when our troubles began back in October, where we started to see inflation really start to tick up. So the question I have is whether or not we are going to see a small lull in inflation before we see it move again. Obviously, this will have, I'm still concerned about the credit markets with consumers, which obviously will have a lot of effect on the crypto markets. Because if we are impending in a recession, starting to see some credit, positioning with consumers, because remember, there's a lot of people that, whether it was the Great Resignation or you look at different strategies in which people weren't going back to work, I think that we will see that now with more jobless claims and obviously more people potentially going back in there. But if credit were to get some pressure here, let's say in 2023, how do you feel like that affects cryptocurrency in general? Because that is the retail trader.
Well, again, I think the inflation was caused mainly by Corona and the war in Russia and Ukraine. Right? Those two punches were very substantial to the world's economy. And but I do think it's a transitory inflation, meaning we should see a decrease in inflation. But that does not mean we're not going to go through a recession, right?
Right.
So I think the Fed already caused or created most of the impact that it wanted, which is cooling down the economy, right? Through about from what I've seen, 17% of total wealth around the world was destroyed since November of last year. So and that's a huge amount of wealth, right? We're talking about, again, trillions and trillions of dollars
Yeah.
that just evaporated. for many people, including me personally, right? So all of us are impacted. We all have risk assets. And the question is just, are these risk assets going to continue? Are they going to hold? Are they going to come back? Or are they going to continue sliding down? I do think inflation is transitory. I think the Fed will be able to tame inflation, then it's going to focus on the markets. And it's not going to do as much tapering and as much quantitative tightening as is already priced into the market. So,
Yeah.
so many assets right now in the market are undervalued. They're trading at very low multiples. But I would wait to, a few weeks ago, I stated I sold all my stocks, because I just don't believe that the markets will price things properly for the next several months. So,
Yeah.
so we just have to wait until the clouds are, um, you know, disappear, until the dragon is slain or put back in the box, and then I think it's time to deploy capital. I am at over 50% in cash right now, and my other 50% is in crypto.
Yeah.
So that's the I think, even though there's inflation and my cash is being eaten away, I think that is a better position than being in stocks or in bonds because of the volatility.
Yeah, volatility is definitely still, and there's still, many analysts still pointing to whether or not we're going to see this as the true bottom, especially if the inflation numbers continue to be as volatile as they have been. And obviously, I think a lot of this will depend on the war in Ukraine. If we do see some step backs away from that, that could really start to shift the global economic position as well. If you look at, okay, so that long term, there's going to be, or I should say, short term, there's going to be some pain here. The question is whether or not and when is the perfect timing to re-enter these markets. And often, what I'm dealing with right now with many of the people I talk with is, people are, should they stay in stocks or should they go into, long-term treasuries or maybe something inside of the high risk assets on crypto. Most everything, at least my strategy has been to really start to strategically invest in crypto and move as much away from traditional markets and into what now is, considered the high risk market, being crypto. With that strategy and that approach, long term, that's an easy win. Most of the time, people are looking at maybe swing trades, things of that nature. From a Celsius aspect, in terms of new products or things that people can get and earn passive yield on or passive income, what other kind of products are you guys working on that would help that? I know you've got the loan product and the yields to certain, obviously, outside the US, but what else is coming down the pipeline for Celsius? Because this would be a great time to release a new product.
Yes. So we have we've released a lot of things. So for example, we have on ramps now. So in 40 states, you can basically connect the Celsius wallet directly to a bank account and
Yeah.
move them over, and they appear as stable coins, USDC. It appears as USDC in your wallet.
Hmm.
And
Okay.
then if you're an accredited investor, you can earn yield and do all kind of other stuff in the United States. It's not true that in the US we don't offer yield. It is offered for anyone who's accredited. If you're not accredited, you can basically use staking. So you could still swap, you can still take a loan, you could still use on ramps. And if you have staking coins, so Ethereum has a staking function, Solana, Cardano.
Right.
Most of the Bitcoin does not, but many of the other assets, the prime assets, top 20, are stakeable. And in July, we are launching basically staking in the wallet or in the web app for non-accredited US. And in July, we're also launching our credit card. So you'll be able to get cash back in crypto right into your Celsius account. And it doesn't matter if you're accredited or unaccredited. So basically, almost all of our products are available to US unaccredited. The only one that's not available is the earn function that's only available to accredited investors.
All right, so I want to thank our sponsor today. That is Celsius, who has 1.7 million people who call Celsius their home for crypto. Join them to buy, swap, borrow, earn, send, and store crypto all in one app with zero fees, the best rates, and human customer service. Head over to Celsius.network to get started today. Do remember that Celsius is not available in all places, so make sure and check out your own jurisdiction, and you guys can figure that out. One thing I do like about Celsius, probably one of the best features I like, is their loan program. And borrowing starting at 0.1% APR is, I think, the best in the industry. And if you are looking at trying to take loans on crypto to be able to leverage up, this is one of those strategies and one of the products out there that I use on a day in, day out base. Full disclosure, big user of Celsius, and I love it throughout. Also, remember, if you guys want to use our link below, it helps the channel out. So check out Celsius.network. I want your opinion on this, because this is something that I think the community and we're seeing more people talk about, is utilizing Bitcoin as a payment rail system. Obviously, we know what's happening with, whether you look at Square and or Block, and what's happening with with Twitter, the potential opportunity here for payment systems being utilized. Sam Bankman talked a little bit about this, saying that he essentially says Bitcoin has no future as a payment network. And then you've got the guy from Facebook. This is the former Facebook crypto chief, launches a payments company for Bitcoin. What are your thoughts on Bitcoin in the realm of a payment type architecture? Lots of news from Strike, all that stuff here at the conference. But what are your thoughts on how that might be used in the future?
Yeah, so I've been very consistent for the last 5 years saying that I do not believe Bitcoin is a payment method. Anyone who bought anything with Bitcoin over the last 5 years regrets that decision. Find me one person that will not reverse the transaction where they bought a coffee or a car or anything with Bitcoin.
Yeah.
And say, okay, here's my fiat. I'm willing to pay with fiat now, and I wish I had that Bitcoin back, right? So when you have a product where most of your customers are disappointed that they used the product, the payment rails, that is a very bad product, right? So on the other side, everybody who hodled this over a longer period of time is extremely happy with hodling. So all of our products at Celsius are designed to help you hodl, earn yield, or take a loan against the asset, do everything besides sell it. And anyone who's trying to get you to sell it is either trying to make transaction fees or other fees on your Bitcoin, or is trying to take away your coins. So
Yeah.
you have to decide. If Elon Musk is willing to sell you a car for Bitcoin, you have to decide who is smarter. If Elon is taking his prized possession, his Tesla, and he's willing to give it away for a few Bitcoins, I think you should not take that trade.
Yeah, for sure. I like that approach. Okay, so in agreement with you
But
in terms of the.
I do want to answer the other question you mentioned, which was, okay, should we buy now? Should we wait?
Yes.
Look, no one knows. No one can predict the future or give you price predictions and be accurate all the time. But what's important is to average over time, right? Is to basically decide how much exposure you want to have, and then, for example, decide over the next 12 months, I'm allocating
Right.
whatever 5% of my assets to this asset class, and I'm going to weather the storm, and I'm going to average. If the prices go up and down or whatever, I'm just going to average in to the market. And for each one of us, the number, the dollar value, or the exposure in percentages is different. That's why there's no
Yeah.
formula. I'm not a financial advisor. I'm not trying to tell people what to do, but it's just each one of us. I have a very simple formula for myself. If I sleep well at night, I don't check the price of Bitcoin 5 times in the middle of the night. That means I have just enough Bitcoin. If I'm constantly checking the price of Bitcoin, that means I have too much. So each person has to find that level, exactly the level where they are comfortable. Because if you're not sleeping at night, that means you have way too much Bitcoin.
Yeah, that's a problem for sure. Alex, USDC, I know that's my number one stablecoin that I utilize. I am really leaning into platforms that do offer either a debit or a credit card that I can, utilize as more of a bank, almost use it as a bank type transaction. You mentioned this on-ramp solution with Celsius. Is that available? You said 40 states in the US, is that right? Okay, so
Yeah, so
how's
I
that work?
think
You just
we have,
is it like a plaid connection over to Celsius
yeah,
and okay.
we we use both Plaid and Wire. So depends which state you're in. It will be a different service, and again, we're still rolling it out, so it's not available to everybody, but it's coming to everybody in about 40 something states. And for example, so for I think you're in Florida, so I'm not sure
Florida. Yep.
if it's live yet, but in California and many other states, it's fully available. It's been available now for several weeks, and you can basically connect your bank account through Plaid to Celsius, and whatever you transfer over as an ACH appears as USDC in
Got
your
it.
Celsius wallet. And then depending on, you can do swaps. So even if you're not accredited, you can swap, for example, into Solana or Cardano or whatever. And in a few weeks, you'll be able to stake that and earn staking rewards inside your custody wallet. If you're accredited, then you can, for example, buy Bitcoin by just swapping from USDC to Bitcoin and earn rewards on top of it.
Yeah. So Celsius announced plans for an IPO for its Bitcoin mining subsidiary just here recently. So that's big news, because obviously you guys being and launching as an IPO opportunity kind of shows, a little bit in terms of the validity of the company itself. So I'm sure you can't talk about the details of this, but is this just the mining section of Celsius that's going to IPO, or will it be involved in other business units?
Yeah, so Celsius Network is the parent company, and we own 100% of the subsidiary. We are obviously very excited that in this market we can still go to market and file to go public. But I can't make any other comments besides what's in the official press release.
Sure.
And when the registration is official, I think anyone can go to the SEC website and take a look at the details.
Yeah, I think this is something we watch often. Is there's only a handful of other companies that have been able to make this leap from privately traded or private company to publicly traded company, and still own a governance token within their own network. And I won't use names, but with that being the case, obviously we saw the CEL token take a pump when this news came out. Does this have any kind of long-term potential effect on the Celsius token itself from an IPO standpoint?
Well, the Celsius business model, the flywheel for the CEL token, everything has not changed. Again, I invite all of your viewers to take a look. We have a weekly show where we go in detail over the economics and the how basically more users that come to Celsius bring more assets. More assets brings more yield that we create from these assets, right? And more yield is translated into more payouts to the community, and the community decides how much they want to earn in yield in kind, and how much they want to earn in CEL token. We don't decide that. We don't influence the price of CEL or try to manipulate the price of CEL or anything like that. So based on how much of the community wants to earn in CEL, that really is what's driving the CEL activity. And we are basically just providing the utility and providing the function. And obviously, if Celsius in general does well and it has more assets, it will earn more. And it's good for everybody.
For sure. Last question to you, Alex, is, I love the Celsius component mainly because of some of the asset classes that are in there are projects and things that I hold, but there's a lot of tokens that I do hold that are not on Celsius. So what's the likelihood of maybe getting something like an Axie Infinity or an ApeCoin, something of that nature that would start to transition over to Celsius and get creative with some of those? What do you guys go through to validate whether or not you bring a token on board?
Yeah, so we plan to add at least 50 assets this year. So between now and the end of the year, you'll see us add a lot of new assets.
That's great.
So I'm very excited that we're actually accelerating that. We also bought a company called GK8, which is a custodian similar to Fireblocks and BitGo and so on. So we own 100% of that, and through that partnership, we can add many, many more assets that are not available on many other platforms. So the idea is to accelerate the adoption and provide more coverage for our community. So we're excited to be able to do that. And again, you'll see the weekly announcements of us adding other assets.
Good stuff, Alex. Excellent to have you. Thanks again for stopping in on the show today. Good luck out there. We're watching Celsius very closely here in the United States because I think you guys have a platform that has a great opportunity, especially for bear market activity, to really kind of hone your skills on understanding how to invest in crypto. Celsius is a great place to hold your projects for sure. But thanks again for
If
stopping in.
you mentioned Axie Infinity,
Yes.
they invented play to earn, and we invented sleep to earn. At Celsius, you don't have to do anything; you just go to sleep, and every Monday
Just
we
let it
pay you
go.
yield. So I think people don't appreciate
SC.
that.
I love it. You're going to have to start marketing it that way for sure.
Yes.
Alex, good having you on. Thanks again for stopping in.
Thank you. Thanks for having me.
You bet. All right, so you guys are tuned in over on the podcast right now. Again, sorry for my voice, guys. This is something that I'm just recovering from COVID, so hopefully it's going to be better. But I am feeling much better, and we're back in studio doing tons of shows this week. We've got a lot in store for you, a ton of analysis, and also some directive videos to give you some tips on how to structure this time in the market, because right now is when millionaires will be made. This is one of the best places, I think, to be in crypto today in terms of overall strategy. So make sure and stay tuned right here. Also, jump over to the YouTube channel. This is where you're going to get all the great content. Also, you'll get notified of new live shows that we've got coming out this week, all that good stuff. Make sure to hit me up on Twitter @Paul Barron. We'll catch you next time right here on TechPath.